It's time for Top That Trade. Joining us now, Alan Nuckman, the Chief Market Strategist at BullseyeOption.com, and Phil Flynn, a Fox Business Network News contributor for Our Trader Game. Round number one, guys. Money, money. A 7% CD has been offered by a couple of credit unions, and the average homeowner equity is now $200,000. But there's this negative talk about investments in the market. Where would you put your money?
200,000. That's a lot of money considering people put 20% down, which was probably about 50,000. So that's quite a return on your investment. People should be very happy that their money is making money. Plus the stock market is 30% off the lows. Unemployment has been below 4% for a year and a half. And interest rates next year are forecast to go down to about 4%. So a lot of positives, but I'm just still not feeling it in people's psychology.
I would agree with you. I mean, partly it's because a lot of people are getting squeezed everywhere you look, whether it's at, the gas pump, whether it's on their heating bills or at the grocery store. And so that's not translating into the overall, economy. It seems like the haves and the have-not economy, and the haves are definitely taking it on to the have-nots. But I think one of the things you are starting to see is you can start to make money on money again. We haven't had that happen for generations, it seems, and forever. And I remember back in the old days, sometimes it was better to put your money in a CD than it would be in the market because you got a really nice return with no risk. And if you're a retiree and you're in bonds, this is a great time to keep rolling those bonds over because you're getting the best rates you've seen in years.
Round number two, summer stall. Gold, the dollar, and stocks have all stalled from that momentous move. What's next before the Labor Day holiday?
Golden slumbers. It's kind of funny. It seems like when gold falls out of favor with the investing public, central banks are the opposite. In fact, if you look at central banks around the globe, they're buying gold at a record pace. Why are they loading up on gold? Well, mainly because they're concerned about inflation, right? And traditionally, gold has been a safe haven against inflation. Now, recently, if you look at the price, you wouldn't think so because the price of the dollar goes up because interest rates have gone up to fight inflation. But what you'll find over time that will level out. So we think gold could be bottoming here. We think we make another run of 2,000 before the end of the year.
So gold's been between 1,600 and 2,000 for the last 3 years. So 1,800 is an important point to lean on. But I agree with Phil that when it's out of favor, that's usually the best time. The key is the dollar. We need to see the dollar decline. I'm not in the job to pick the catalyst, but whatever the catalyst is that knocks the dollar below 100, that's going to help out a lot of markets. And let's remember, again, I'm going to say it one more time. The S&P is 30% off its lows. So yeah, a price pause pullback is warranted, obviously.
Round number three, hello highs. Buffett Berkshire Hathaway just hit a new all-time high with its shares. What does that tell you about the stock market?
Patience. Patience pays. It wasn't so long ago. I think about a year ago, everybody was questioning Mr. Buffett's investment strategy. So his fund is making all-time highs, whereas the market's still about 7% away from the top. So I'm thinking the market's going to do the same as well as it's done every single time in history. But let's look at what Buffett has. Not only does he have stocks, obviously, he's got $150 billion in cash, and he buys $10 billion worth of short-term bonds every week. So he's getting 5% a year on that $150 billion. I'm not good with math, but that adds up to a lot of free money.
It does. And that goes back to what we started the show with, higher interest rates, making money on money. And Warren Buffett has done that in a tremendous way. They're sitting on a record amount of cash right now. They've been selective on their stock buys. They've been buying things like Occidental Petroleum. They're getting into artificial intelligence stocks. Those are the stocks they're in. But at the same time, they're not buying like crazy. And I think what that tells you is that after this incredible run on the stock market, guess what? Buffett is waiting for a pullback to buy everything. And just remember, when nobody wanted stocks in the beginning of the year, he wasn't selling, he was buying. So no wonder his shares are at an all-time high.
And for the average investor, if you've been putting money away every single month in your 401k, your dollar cost averaging, you've actually beat the market by a dramatic amount from those last highs because you were buying when it was lower and continue to do so.
That's right. You buy when people cry. On to the bonus round question for today. The heat is on. Can you tell us the hottest temperature reached this summer in Death Valley? 122, 131, 134.
I say 131 degrees, but it was dry heat, so nobody cared.
Hot markets. They've cooled a little bit. But yeah, I'm going to say the 130 as well.
Well, it was hotter than you guys guessed. The answer is Death Valley is said to have flirted with 134 degrees.
You're going to kill us for 1 degree. We're sitting here sweating.
All right. Let's have 1 degree of separation right now.
Rough crowd today. Business First Dan will be right back. Don't go anywhere.